and we can come up with our budget income statement. Okay, and the next step we will focus on the financial budget. Okay, as you can see here, we will try to come up with a cash budget, and then finally we will come up with our budget statement of financial position for next year. Okay, let's see. For the cash budget, this one will show you anticipated cash flow during the next year. Okay, so this one, the cash budget tend to consist of 3 sections. The first one will give you information about cash receipts during next year, and then the cash disbursement, and then finally, if you don't have enough cash, you may consider do some financing. Okay, first start with the cash receipts. How much cash that you will receive in the next year, and then you compare that with the cash payment, right? If you don't have enough cash, you may borrow. If you have too much cash, you may consider invest in something else, okay? So this is the cash budget. Let's talk in detail, okay? When we need to prepare the cash budget, the format tend to be look like this. First, we start with the beginning cash balance, and then we add the cash that we receive during the period. And then we know how much cash that we have, right? And then we subtract by the cash that we pay throughout the period. And finally, we will know, do we have enough cash or not? If we don't have enough cash, we need to do some financing, we need to borrow. But if we have too much cash, as I mentioned, right, we can plan to invest into something else. And then we come up with our ending cash balance. Okay, let's see. For the first part, the cash receipt section. In this part, it will show you the expected cash that you will receive from the principal source of revenue. Think about if you have sale, right? Your sale can be either cash sale or credit sale, right? So we need to think about like from the sale that you show, how much cash that you will generate from the sales, okay? So this is the first part. And the cash receipt can come from other resource as well, okay? Other than revenue, you may receive cash from interest, you may receive cash from the dividend, or you may receive cash from selling stuff, okay, like plant asset or capital stock, okay? So this is the cash receipt section. And the second section will tell you information about the cash payment during the period. So the main payment that you will see will be related to the payment of direct material, the payment to labor, and payment for other expense. Okay. And finally, for the financing section, in this case, after you compare the cash receipt with the cash disbursement, if you will have the difference, it will tell you whether you need to borrow or you can repay the debt or you can invest in some other place. Okay, so this is the 3 sections that we will talk about. Okay, for the cash budget, let me recap a little bit. We must prepare the cash budget in sequence. We need to start with the cash receipt first, and then followed by the cash disbursement, and finally we will come up with the financing section. Okay, let's see information that we have. Okay, let's look at each one by one. This company has the following assumption. First, for the cash, the beginning balance equal to 38,000, and the company plans to maintain at least 15,000 at the end of the period. Okay, it means that at the end of each quarter, the company must have the cash equal to 15,000 at least. Okay, and then the second assumption related to sales. Okay, from our sale budget, that is the total sale, right? And for the sale that we have, we know that 60% of the revenue will be collected in that quarter. Okay, and the rest 40% will be collected in the following quarters. So it means that if you sell 100 baht, right, 60 baht will be collected right away in that quarter, and the rest 40 baht will be collected in the next quarters. Okay, And the company also knows that it has an account receivable of 60,000 at the end of last year, okay? And this amount will be collected in full in the first quarter of 2014, okay? Which is our year that we making the budget, okay? And we also know that this company plan to sell short-term investment in the first quarter, and the company will receive the cash for 2,000. As you can see, information number 2 and number 3 tell you about the cash that the company will receive in 2014, right? And we have more information. Number 4 tell you about direct material. From your direct material budget, you know that you have to purchase direct material, right? How about the payment? You can deal with the supplier that 50% of the purchase will be paid right away in that quarter, and the rest 50% will be paid in the next quarter, okay? So this is our deal with the supplier, okay? And we also know that at the end of current year, 2013, we still have the account payable at the year end of 10,600, and we plan to pay this amount in full in the first quarter of 2014, okay? And for the direct labor, manufacturing overhead, and selling administrative expense, we will pay cash right away, okay? And also the management plan to purchase the truck in the second quarter for 10,000. So information 4, 5, 6, and 7 tell you about the cash payment, right? About the cash disbursement during next year, okay? See 2 and 3 tell you about cash receipt, and 4, 5, 6, 7 tell you about the cash payment, okay? And we also have 2 more information. Number 8 tell you that the estimate the annual income tax, the company plan to make the payment equally for each quarter, okay? If we go back to our income statement, right, we estimate that we're gonna pay income tax for 12,000, and this 12,000 the company plan to pay equally for each quarter, okay? And for number 9, for the loan, okay? If the company has the loan, the company plan to repay the loan in the earliest quarter in which the company has enough cash, okay? It means that if the company has the minimum cash of 15,000, and if the company has more than that, the company will use the money to repay the loan, okay? So this is all information that we have. Let's see how can we prepare the cash budget, okay? First, start with the cash received from the customer, okay? Then look at information number 2, okay? We know that for sale budget, this is our total sale for each budget, right? First quarter, we will have the sale of 180,000, and second quarter, third quarter, and fourth quarter, this one come from same budget, okay? And how about the cash that we will receive from our sale? Let's look at the first quarter, okay? For the first quarter, we know that we still have account receivable from last period, right? And this account receivable will pay us in the first quarter. So the first cash amount that we receive will come from account receivable from last year, right? So this is 60,000 from account receivable that we will receive in cash in the first quarter of 2014, okay? How about the sale? During the first quarter, we can sell 180,000. How about cash? How much that we can collect in the same quarter? 60%, right? From information given, we know that our customers tend to pay 60% of their purchase within that quarter, okay? So this is the amount that we will receive in the first quarter. As a result, in the first quarter, we will receive the cash from our customer equal to 168,000. Okay. So this is the first quarter. How about second quarter? The first amount comes from 40% of quarter one sales, right? 108,000 multiplied by 40. So you're gonna get the first cash amount from account receivable, right? 72,000. How about second quarter sales? We know that we have the sales equal to 210,000, right? 60% we're gonna receive right away, okay? So we just multiply 60% with 210, okay? So you receive 126,000 in the second quarter. So in total, second quarter, you will receive the cash equal to 198,000, right? So this is second quarter, right? This is the cash that you will receive from your customer. How about the third quarter? For the third quarter, you will receive 40% of second quarter sales, right? So it's gonna be 84. And also, you will receive 60% of the third quarter sales as well, right? So in total, 228,000 for the third quarter. How about the last quarter? The same concept, right? In the last quarter, you will receive 40% of the third quarter sales. So it's going to be 96,000. And you will also receive 60% of quarter four sales, right? So you're going to get 162,000. So in total, you will have the cash collect in the last quarter equal to 258,000. Okay. So this is everything that we receive like from customer, right? How about the sale, right? In the last quarter, we have the total sale equal to 270,000. 60% we collect right away, right? How about the rest? 40%? That one we will collect next year, right? So that amount, let me show you a bit. This 40% equal to how much? It will be equal to 108,000, right? And this one will be shown as your account receivable, right? Think about like this amount will be shown as your asset, right? It will be shown as your account receivable on statement of financial position, okay? So this one will be part of your budget statement of financial position, account receivable. So this is the cash received from your customer. Okay. So everyone okay with this, right? So this is the cash collect from customer. And we also need to prepare the schedule of the cash payment for direct material, right? We know that from our direct material budget, we know the purchase amount, right? How much that we purchase during each quarter. But how about the payment? We don't pay everything in that quarter, right? So we need to come up with the payment schedule here. In the first quarter, how about the cash payment? We know that we still have account payable from last year, right? And those account payable, we will pay right away in our first quarter. So we will pay 10,600 for our account payable from last year, right? And how about our purchase in the first quarter? How much that we pay right away? 50%, right? So it's gonna be 12,600 that we pay right away in the first quarter. And then we add these two numbers together and we know the cash payment for the first quarter, right? How about our second quarter? We need to pay half of the purchase, half of quarter one purchase, right? The first quarter purchase, we pay the rest in second quarter, so we just pay that amount. And also, we purchased 29,200 in this quarter. We pay 50% right away, right? So this one is 14,600. And in total, you make the payment of 27,200, okay? And similarly, we do the same thing for the third quarter and the fourth quarter, right? Half of second quarter payment is paid in quarter three. And then half of the third quarter purchase is paid right away, right, in that quarter. And the last quarter, we just use the same concept, right? And for the last quarter purchase, we know that we made the purchase equal to 37,200, right? But we pay only half of it in that year. How about the rest? The rest will be paid next year, right? So this amount will be reported as your account payable, okay? Will be your liabilities in statement of financial position later. See, we pay only half, and the rest we will pay later in next year, okay? So this one will be reported as your account payable, as your liabilities in your statement of financial positions, okay? So this is the cash payment schedule, okay? You make the purchase, but you don't need to pay right away, right? It depends on how you make the deal with the supplier. You may pay 50-50 or you may pay 60-40. It depends on your agreement, okay? So this is the cash payment schedule. And let's see, after we have everything on hand, right now we just combine everything together and come up with the cash budget, okay? Let's look at the first quarter first. We have the beginning cash balance, right? And then we just add the beginning balance with the cash received. In the first quarter, we know that we collect the cash from customer, 168,000, right? And we also know that we're gonna sell our investment, okay? So in total, in the first quarter, we have the total cash equal to 208,000, okay? So this is the total cash that we have, okay? And then we just subtract the cash that we have with the cash disbursement, okay? The cash disbursement will be related to many things, right? Direct material, direct labor, and some other expense, okay? And also we need to pay for the income tax, okay? Since we know that our income tax expense for the whole year equal to 12,000, and then we plan to pay equally in each quarter. So it means in each quarter, you're gonna make the payment equal to 3,000, okay? And then you just subtract cash payment from the total cash that you have, right? So you will have the cash left equal to 25,500. Okay, this one is more than the minimum balance, so you should be okay with that. Okay, so this is the first quarter, and then for the second quarter, you just take the ending balance to become the beginning balance for the next quarter, and then you do the same thing, right? You add the cash received, and then you subtract by cash disbursement, and then you will see that you have only 12,000 left at the end of second quarter. Okay, as you can see here, 12,000 is lower than the minimum balance, right? The company has the policy to have the minimum cash balance equal to 15,000. As a result, you need to borrow 3,000 to make the minimum cash balance equal to 15,000. Okay. As you can see, for the second quarter, under your financing section, you need to borrow 3,000. Okay. And then you have the minimum cash balance as your policy. Okay. And then in the third quarter, you just do everything like the same concept, right? And then you can see that in the third quarter, you have cash equal to 22,500, which is more than the minimum cash requirement, right? So this company just repay the debt right away, okay? As you can see, the company has so much cash right now, so the company make the payment for the debt that it borrowed earlier. As you can see, the company borrowed 3,000, but when company repay the debt, the company need to pay for interest expense, right? That's why the payment equal to 3,100. Okay, and the company still have the ending cash balance more than the minimum balance. So everything seems okay, okay? And then we keep doing this until the last quarter, okay? And for the last quarter, after you have the ending cash balance at the end of the fourth quarter, this amount will be reported as your cash, right? In your statement of financial position, okay? You see my point, right? After you prepare the cash budget, the ending cash balance at the end of the year will be shown as your asset in your statement of financial position, okay? So this is information that we have, okay? And let's look at, before we go, okay? Why do we need to prepare the cash budget? The cash budget will help us to manage our cash more efficient or effectively, okay? And it also tells us how much cash that we have. Do we need to borrow, or we can have extra cash to invest in somewhere else, okay? And after we have the cash budget, we can compare our statement of financial position, okay? As you can see, the cash, right, from the cash budget is shown here. Account receivable, we talked about that already, okay? And for finished good inventory, we can get that information from the production budget, okay? Think about production budget. It tells you about ending inventory, right? So you can have the number of the unit and then multiply by unit cost, and then you can come up with finished good inventory. And also for raw mat inventory, you get this information from raw mat budget because you have ending balance for raw mat inventory, right? You just take that and show here. And for building and equipment, it's more like we take it from previous year information. We know that we have the building equal to 182,000, right? So our building increased. As you can see, before, at the end of last year, we have the building and equipment equal to 182, right? How about right now? Why it changed to 192? It's because we purchased the truck. See, in second quarter, we know that we purchased the truck. So the truck worth 10,000. So we just add 10,000 to our building and equipment, okay? And the rest, maybe you can look at this on your own, okay? นะคะ So for the exam, please try to do like this stuff, okay? For the cash payment and cash receipt, you must know how to do it, okay? And for the rest, you can read on your own, and it will not be tested after this, okay? And the last topic, actually, it will be, let me see, this one is not important. And the last topic, I will talk a little bit about like merchandising company, okay? If you are not manufacturing company, can you guess if you want to prepare the budget? There is only one small difference, okay? Let me go back to this picture a little bit. So this is the master budget for production for manufacturing company, right? But if you are merchandising company, it means you don't produce goods by yourself, right? You just purchase goods from the supplier. So if you are merchandising company, this production budget will be gone, right? If you are merchandising, you don't need to prepare production budget. If you don't prepare production budget, it means that direct material, direct labor, and overhead will be gone as well, okay? But this one will be changed to purchase budget, okay? How much inventory that we should purchase? And for the purchase budget, the concept will be similar to direct material budget, okay? The concept how to compute the purchase budget is quite similar to direct material budget, okay? So I just tell you the concept, okay? Okay, let's stop right now, okay? And we will meet again next week, and then I will come up with the exact guideline.